Charting disintermediates financial news from reality. What does that mean? Well, disintermediation is basically removing the intermediary, that is cutting out the middleman. And what price movement does is it shows you what's really going on. Those of you who listen to the financial news and you tune into Bloomberg or Fox Business or CNBC and you watch the talking heads and the breathless experts that say one thing one day and the complete opposite a week later, back-to-back experts saying completely opposite things, and you wonder why that doesn't work with your trading, it's because they are selling you, I would argue, commercials. The stuff between the commercials is what they're using to hold you there so you can see the commercials. In other words, that's not necessarily, and many times is not at all reality. Reality is what you see on the charts. Reality is price movement. That is the only thing that matters. Listening to all that other stuff, if you just want to be entertained, understand it to be entertainment, not what's actually going on. What actually is going on is what you see on your charts every day. And let's jump into them. We see a down day for stocks, down day for gold and Bitcoin, up day for bonds. Let's first jump into the S&P 500, down 0.65% for today, not reaching the low that it reached back on the week ending the 28th of January. But we do have a red down candle after 2 prior weeks of lots of indecision. Price percent oscillator still pushing down, derivative oscillator gaining downward momentum. Overall, lots of downward pressure on the market. We can see on the 2-day chart, this latest 2-day candle representing Thursday and Friday. See how the price percent oscillator spiking over. Derivative oscillator still positive, losing momentum. Now again, it is an oscillator. The derivative oscillator is a triple smooth version of the relative strength index, so it got spun up with several days of up movement and now is slowly unspinning. If markets keep moving down, you can expect it to flip over to red probably sometime next week. Let's look at the half-day chart. Again, we can see stacked up 2 days of down movement. Down in the morning, a little bit further down in the afternoon on Friday, price percent oscillator heading down, derivative oscillator heading down. So with the S&P, lots of downward pressure, a down week. Let's look at the Nasdaq 100, another down week, downward pressure, very similar to the S&P, red down candle. Now it didn't have, well, we can go back and forth and compare these over and over, but we'll not do that. I'll just say red spinning tops. We had more downward pressure on the Qs with a green spinning top and a red spinning top as opposed to the dojis. I think I said spinning tops. Those are dojis on the S&P. Spinning tops on the Nasdaq 100. So again, less indecision, more down movement. Down candle for the week. Price percent oscillator heading down. Derivative oscillator is flat. 2-day chart spiking over, going down, very similar to the S&P, red down candle. And we look at the half day, and again, down in the morning, a little further down in the afternoon. Lots of downward pressure still here on the stock market. Now, we see on the 20-year bonds, an up day, 1.05%, but that didn't prevent this being a down week. We can see we reached a lower low, red down candle, price percent oscillator heading down, derivative oscillator is about flat. 2-day chart, we have a green open box spinning top pushing through the 2-day trend line, still negative as far as the price percent oscillator goes, derivative oscillator negative, losing downward momentum. So we do have a pause in the down movement. Still have lots of downward pressure, particularly on that weekly chart, but a little bit of a pause on the 2-day. We'll see where that leads us to this next week, and we can see 1-2 days of up movement, up in the morning, about the same in the afternoon on Friday. Price percent oscillator spiking up, derivative oscillator heading up. What's important to note is this is the weakest of our 3 charts. This is the half day. Price is still below the weekly, did push through during the course of the day in the morning, further up in the afternoon, pushed through the 2-day trend line. So let's make sure to draw us a good, there we go, got a good trend line there. So again, lots of downward pressure still on bonds, little bit of a break on that 2-day chart, but it's still negative. Now, let's look at what gold did for the week. Gold down just barely today, 0.07%. That's not 7%, 0.07%. Price percent oscillator on the weekly chart spiking up. We have a recent high here up, let's see, a high of 177.53. The prior high 178.85. So we've not quite reached that, but we are getting close. Is this going to end up being a ceiling for us? And gold is going to rotate back over going down, or is it going to blast through it? We'll have to wait and see. Price percent oscillator spiking up, as I said, derivative oscillator heading up 2-day. Look at that big old 2-day candle. Quite nice. Wick on the top, nice long candle. Price percent oscillator accelerating up, derivative oscillator heading up. And on the half day, again, you can see where there was some weakness in the day after a very strong Thursday, Friday slowing down. So we'll watch and see if we're hitting a top here. Keep that, put that in your show notes, pay attention to that over the course of this next week. What about Bitcoin? Down again today, 4.61%. We had a green candle originally as the week started off, but it has turned into a red open box candle. That's not a down candle, it's a slowdown in the up movement. The high for the week, 44,260. The high last week, 45,338. So again, not reaching a higher high. Price percent oscillator looks like it's tracking a little bit down now. Derivative oscillator losing downward momentum, still negative 2-day. Look at that. After several green and red open box candles, one of those 3 green open boxes, a spinning top and then 2 open box candles, we see a red down candle. Price percent oscillator losing some momentum after several days of up movement, and the derivative oscillator is positive but heading down. I told you not to get overly excited about where things were going because we haven't had that crossover going up on our weekly, which we refer to as a weekly vertical crossover. So keep your powder dry if you want to practice trade Bitcoin, because it ain't happening yet. What do we see as far as a massive crossover going up where you have weeks and weeks of up movement as we've seen in the past? What's happening on this half-day chart? Again, down pretty strong over the last 2 days. Price percent oscillator heading down, derivative oscillator accelerating. So that is where we are as we end the week. I hope you guys are filling out at least once a week. You're filling out your weekly market worksheet, and every time you do a practice trade, you fill out that trade worksheet. I'm going to put both those trainings at the end of today's video so you know how to fill them out. If you'll look in your show notes, you'll see a PDF attached every day in that email. 3 PDFs actually. Daily market, weekly market, and trade worksheets are available for free. You can print them out, fill them out as you listen to the show if you're interested in supercharging your training. If you're not a subscriber, for free, go to chartingwealth.com, sign up every day. We'll send you things like those PDFs of the weekly, daily, and trade worksheets, along with a special training that we send out to you every day. The training we have for you today is every indicator can fail. Every indicator can fail. It's important for you to understand how that looks and then what you do with it. Lots of great advice there. Daily trainings available for free. Sign up at chartingwealth.com. We never spam. We never sell that list. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.